What's up, sports bettors? I'm going to be giving you two sharp bets for week 17 of the NFL season. So I say this all the time, but you can see it right here. Typically, as week 16, as a week comes to a close, you'll see lines start to move in the upcoming week. Sportsbooks start to post odds, early sharp action comes in, lineups start to change, people look at the previous week and start to, place bets for the upcoming one. So you can see right here on Bet Rivers, it looks like the Cardinals lines just moved against them from plus 150 to plus 163. And there should be a lot of good bets in week 17 just because, we're wrapping up the NFL season, lineups change, who's actually going to play, all that stuff starts to be considered. So anyways, let's go ahead without further ado. Let's get into it. The first game I'm looking at is Eagles-Saints, okay? So I ended up taking the Eagles on the spread, minus 110, on Caesar Sportsbook, and you can see my play right here. So Eagles minus 6.5, 2.5K. A lot of other bets as well. Kind of as you can see right here, soccer bets. I say this all the time, but you should be betting on every sport. The same concepts that apply to betting on the NFL apply to betting on the NBA. It really doesn't matter. You're looking for value, enough value to beat the VIG and beat the juice. So this is the first play I locked in, 2.5K stake, 1.6% edge or profit margin. So our bet has $40 in profit margin. You just take your edge from OddsJam. This is also known as your profit margin or EV percentage, and you multiply it by your stake, and that gets you your profit margin in dollars, which is just going to be $40. So I can delete these. That was from a previous video. So this bet made me $40 richer in expectancy. If you came to me and were like, hey, I'll give you a $20 bill for your bet, I would tell you, no, my bet's worth $40, right? Now you may be like, okay, why didn't you bet more on it? And again, there's a bunch of videos we have about bankroll management, kind of like the Kelly calculator, the Kelly criterion is most popular, but you want to bet within your bounds, right? It's the same way, you buy the S&P 500 or an index fund when people talk about investing, as opposed to putting all your money in one stock, right? You want to diversify. So ideally, just like you'll see in, kind of my Caesars account, I have a lot of profitable bets, college football, UFC, and I kind of spread it out. I'm creating my own diversified portfolio, but plays with an edge, right? So this is just from the EV tool, the positive expected value tool, EV betting, positive EV, is what I tend to focus on most. You can set up filters for whatever sports books, leagues, date range you want to look at. And it'll just show you the highest profit margin plays first. And then you got to go quick, right? I say this a lot too, but great lines don't last forever. These sports books are trying to keep in check, like you can see just for, one NBA game, how many lines these sports books have just on one tab. They have tons of different things that you can bet on. So as a sharp bettor, you're kind of competing against the sports books. They're trying to keep everything in check, all 50,000 odds, and you're trying to get to great lines with a positive profit margin before they realize. So all of the early action was coming in on the Eagles. Picking them up minus 6.5 at minus 110 is a no-brainer, And you may be like, well, you didn't even talk about sports yet. And it's like, well, there's millions of people who bet on the NFL. It's a fair market, just like the stock market. People buy a stock, the price goes up. Money comes in on the Eagles, they'll move from minus 6.5 to minus 7 to minus 8, right? It's supply and demand. These bookmakers don't want to have risk. They want to take bets on equal and opposite sides, right? And make their little risk-free spread. That's called the VIG, right? Most sports books, like you can see, Caesars right here for their spread, it's minus 110, minus 110. They're making you bet 11 on both sides of the spread to win back 10. And if you think about it, it's like, well, that's not really fair. They're forcing me to bet 11 to win back 10 on both the over and the under, both sides of the spread. These are equal and opposite outcomes. And that's the tax they charge, right? It's the VIG, forcing you to bet 11 to win back 10. And then they assume you're just going to win half your bets on the total. So you're going to bet 11 and then you're going to lose 11 or win back 10. And they just assume over the course of the long run, they're going to get 11 more than you get 10. That's the sportsbook business model, right? So this play, we have a bunch of videos kind of quantifying the profit margin and stuff like that. But it's an early play for next week. And you can see Sports Illustrated has the line at minus 118, FanDuel minus 130, DraftKings minus 128, Betfair Exchange. This is peer-to-peer betting. So it's different than a sports book, right? Sports books, the way they make money is you beat them or they beat you. Long term, it's that simple. It's a zero-sum game. You beat the sports book, they beat you, which is why it always surprises me when people listen to advice or bets put out by sports books. They'll create content. Hey, take this pick. It's like they're putting out content to try to make money off you. And it doesn't necessarily mean the bet is, not going to win. It just means the information they're providing doesn't teach you how to beat them long term. It's kind of like a roulette wheel. You win at the roulette wheel, they're like, yeah, go man, like awesome, you won at the roulette wheel. It's not like they kick you out because they know roulette is a game you can't beat and they're going to beat you long term. So, Sports Illustrated has this minus 118, FanDuel minus 130, DraftKings minus 128. So I say this all the time, but like how you want to think about it is you want to treat every bookie as an independent data point of where the line should be set and try to get a sense of like, okay, where should the line be set? So Sports Illustrated is telling us minus 118, FanDuel minus 130, Pinnacle, sharpest bookmaker in the world, minus 125. But you can notice they have a lot less VIG in their market. There's only 14 cents in width. Stake has 28 cents in width. So they have double the VIG. Frickin' super bets, who is this? They have 57 cents in VIG in their market, right? Market width. So Pinnacle only has 14. So we kind of look at all these data points and it's like, well, most books are like minus 130-ish. We're getting minus 110. Seems pretty good, right? Even with the VIG removed, right? So if we put in FanDuel's market as an example, plus 102, minus 130, what this calculator does, called a no VIG odds calculator, is it removes the VIG. It removes the juice. So, if you take FanDuel's market and you remove their sportsbook spread, the fair line is minus 114. So FanDuel is saying, this, right, the Eagles minus 6.5 should be minus 114. And the Saints plus 6.5 should be plus 114.17. So that would be a market without VIG, right? You can bet 100 to win 114 on the Saints. You can bet 114 to win back 100 on the Eagles. Does that make sense, right? It's a no VIG odds. You're removing the spread. It's kind of like if a car dealer's like, hey, I'll buy this Toyota for $10,000 and then they flip it and sell it for $12,000. It's like, well, when they bought it for $10,000, they sold it for $12,000. They probably thought it was worth like $11,000, somewhere in the middle, but they made their little cut, their spread. So you got to remove it. So this is the first play I went with. And pretty clear value again, like you don't have to know much about the math. We have a bunch of videos if you're curious, and I write a lot of strategy articles on the OddsJam blog, kind of like breaking down the math. But if you want a simpler point of view, it's just like logical sports betting. This is how I got into it before I learned all the math. Is like, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, because our OddsJam column just copies the Pinnacle column. So we have 10 data points all telling us this should be roughly minus 130. We're getting minus 110, 20 cents of improvement. Seems like a no-brainer, right? It's an arbitrage bet to Pinnacle as well. So it's also an arbitrage bet. So whenever there's an arbitrage bet, I say this all the time, but like whenever there's an arbitrage bet, if we go here, you can make risk-free money betting on equal and opposite outcomes, right? Like here in Washington, Texas, both the first half, you can get the first quarter total points at plus 104 and the under, you can get at plus 100. You can make a risk-free profit betting the over and betting the under. That's arbitrage. And granted, it's hard to do. You got to move quick. These sports books, are always trying to move, and get out of the way of arbitrage bets so they're not hit by sports bettors trying to earn this risk-free profit. But what it means is whenever there's an arbitrage bet and you could make risk-free money, one of the plays has to be profitable. One of the plays has to be profitable, right? Whenever there's a market inefficiency and you could bet equal and opposite outcomes and earn a risk-free profit, by definition, one of the sides, one of the plays had to be profitable. So in this case, it's Eagle minus 6.5. Pinnacle's the sharpest bookmaker out there, the most efficient betting market. We don't, we definitely don't want to be betting on the Saints plus 6.5, on Pinnacle, the sharpest NFL betting market, right? You want to be taking the Eagles minus 6.5. So all the data in the market is indicating to you hammer this minus 110. Again, you're never going to get a perfect answer, right? With what exactly should the odds be? Because again, these sportsbooks set lines independently, right? They're all taking different bets, moving around lines. They all have different models. They all invest hundreds of millions of dollars into their models and stuff like that. So they're all moving around lines, and we're looking for value in the market. In the same way an investor is looking for value, we're looking for value as a sports bettor. Really is that simple. I mean, people love to overcomplicate crap in everything, but it really is the case in sports betting. You have 100 data points on where the line should be set. Find those rare few betting opportunities like Eagles minus 6.5, where the sportsbook is screwing up big time, and hit them and bet them, right? It's really that simple. You have hundreds of sportsbooks, right? This is only in my location. If you open up, and I have a lot of sportsbooks filtered out as well, which you can probably, if I opened up my settings, you'd see it. But you have hundreds of sportsbooks all setting lines on this game. Just look for these market inefficiencies where one sportsbook's screwing up big time, and hit that bet because they're clearly off from the market and your play has an edge and you'll win in the long run. Really is that simple. So that's the first bet I took, and then a lot lower of a profit margin, but there's a word which is confidence, right? So here, Pinnacle, they have the market minus 121 plus 107. So if I go here, back to our Novig odds calculator, and then I put this in, the fair line according to Pinnacle is minus 113. So seems pretty good. No other book offering better than minus 121. We're getting minus 110. Lower profit margin, doesn't look as fantastic as the Eagles one. But again, these are very efficient betting markets. They're very tight betting markets, right? So any edge, I want to take advantage of. So I ended up locking it in for $5,000 on the Bears plus 6. Why did I bet more on this one? Because Caesars gave me 2.5K, and then, I tried rebetting it and they didn't let me bet it. And WinBet let me get 5K down. So I track all my plays, just mathematical, sports betting. I track all my plays in this kind of Google sheet from YouTube. It says here, no promos, no fantasy. So if a sports book's like, hey, here's a free $100 bet, I'm not going to include that in my profit and loss. That's cheating. The point of this is to make money EV betting. And since the start of YouTube, we're up 42K. There's been some ups and downs. We started out down, but again, it's streaky. I told people I track my profit and loss on this verified bet tracker Picket, and it doesn't link every sports book, which is a little annoying, but FanDuel, and you can see it's streaky. So you got to be able to deal with some ups and downs as a sharp bettor. But anyways, let's make some money.